Welcome to TradeTheMBA.com. This is John. This report is for the 30th of April, and as we end the month, well, we're right up at the peak levels here. We're just slightly off from where we ended the day yesterday, and it really puts us in an interesting position here with going into the very last day of the month at the peaks, and we're going to start off the beginning of the month getting ready for new fund money to come in, and good chance that we can break into new range here above that 2950 is something that I've been calling for a little bit of time, way back when we were down in the 1400s, and we were talking about S&P 3000. Some people thought that was ridiculous, and then even as we got into the 23s, it kept talking about it, and here we are, just about there. Key trend point here, and this is an interesting question I got up from a member about, what do we look for when gauging trend? Which indicator should we go to first? And what's the best way to evaluate it? I like to look at, obviously, broader time frames, starting with, in this case, the daily, and knowing that, okay, in this case, I've got cyan under red DOC, and, of course, red above zero. Great trend indicator there. We more see it from shakeout, though. Once that gold starts rising, that's an indication that we've moved into a long-term trend. And then to see Azure join into it, because from a time standpoint, you've got gold, then you have the Azure, and then finally the blue. And that's why you can see it in this order as the trend develops. And again, like I say, we really don't usually worry about the strength of that trend until these two meet. Sometimes you may just get the gold come up and then it starts to roll over before you even see an Azure or anything like that, in which case you would know that that's going to be less duration. But you can see it even back from here when we were talking about at the beginning, the start of the year, once it began to rise, and we just ended up with this continuation. It wasn't until we get to little key flex points, and you can follow those flex points when they get close to each other and reach. Yeah, you get a potential for a little bit of softness. That's where we pay a lot of attention then to DOC spreads at that particular point and where our steel is, because it's that steel is reset, and we know that we've got a chance for that to turn around, and we're not going to know that until it actually makes that effective move. So that gives us a pretty clear guideline if we've moved into an extended range. When we don't get that change or pop, then we certainly know that we've got just a standard shakeout move, in which case then we begin to keep our strict focus on crossover of our yellow rising histogram. The yellow over magenta is what I'm referring to there. And again, you can see the same thing happens when magenta crosses above red. Just layering of effectiveness as far as what we're seeing from a broader trend. Within a short term, I mean, this is a long-term chart with a daily, but we'll see the same thing in the 50K and 5K. And then you get into more precise, immediate movement with your DOC and every flex move of the short-term buyers in steel to the mid-term buyers and so on and so forth. And so when we look at this, we're seeing, okay, fine, we got a little bit of short-term fade off here at the start of futures open, but from the previous day, strong reaction from them, lifting up with both green and steel at the same time. That usually bodes pretty well for an improvement in price, and that's exactly what we ended up with until a little bit later in the day. And you can see a similar thing from the NASDAQ here, the rising gold that began all the way back there. And this is why in the GAM function that you see, it just colors them gold, and it's not hard to follow from that particular point. You just begins to see that when you get that blending point, you've got to be a little more cautious, and you can say, okay, hey, do I still have my red moving in the right direction? Absolutely, in this case for the NASDAQ. And then it began a new cycle, same situation. Red's continuing to rise, not worried about it. But as we talk about right now, you're seeing Azure coming very close to a gold that's beginning to fade. Okay, this causes me a little bit of thought reaction, particularly when I've got steel under the negative 13.5. It's effectively coming from the top, so yeah, I would begin to think, okay, I've got to pay a little more attention to what's going on, NASDAQ-wise at least. I expect a return of the euro, coming right back up to the previous break of the low. Not a shock. What it does from here becomes significant. We've got already orange below. We've got a little bit of red rising. We did have a previous dip below the red line, but it's already met that with a new low, so that's no longer a factor from that standpoint. So we'll see if any of the momentum can build on there. Obviously, upside 112.8 right in there, moved to the 50%, but it still has a little bit more work to show from where it's at. In particular, just the shorts we're very happy with that move. I mean, it was pretty nice, going right and consistent with everything we expected. We're not looking for gold to make much of a play off this deep move. In fact, it really didn't really get very far. I mean, it was a nice pop-up. The key came in here as you start to get to green cyan meat. And when they start to flatten out, then I look for the first rejection, and that's where I would expect us to not only revisit the lows, but probably make a new one. So here we go from that 50K standpoint on the same ES, and likewise, we see that gold began its move right at the same time that we were looking at the secondary buy from the Mo, and it's continued, even though it's not dramatic. It doesn't need to be. The key is just that you're witnessing it, making it spark, which gives you an indication that there's been enough momentum behind this to really propel it. And you can see the same thing happen right here, and then likewise we got the blending right there between the gold and azure, and that began, well, which is marked right here by the sell signal. Appropriately so, and then boom, it faded from there. Because what you don't know is that you don't know that you're going to get this reset at this particular point. So you've got to go ahead and take that and say, okay, yeah, fine, maybe it resets to 50%, maybe it doesn't. Either way, I'd rather be out from there. I can always re-enter at that level or back above. And sure enough, it finally did make that orange dip. But it's possible that that orange just continues in a continuation mode, which is caught right between red and cyan, and you just get a continued trail off. I think we see that in the 5K right here at the end of the day. So we had all these little peak moves, and then sure enough, it just began the cascade, even though it gave the crossover right here of the steel coming about red. It's like, okay, hey, that's a warning. It could be close to over, but I'm still fading shakeout. And I've already rolled over on the gold rising that was started right there. And then boom, the magenta candle comes in confirming that everything has completely broken down, and it follows through here. When we look at some of these a little earlier, where we got the break signals, you had your peaks coming through with the gold crossing below. Didn't really have a rise in your gold at these particular points. You had it from over on this previous one where it was beginning to rise, and that's where these orange candles actually, the little histograms that develop in there, usually indicate a little bit more of a break, but you're going to get this kind of situation in an extended run, particularly on a short time frame chart like a 5K. And they're not incorrect. It's just what I look for, and I point out to these, is that if I've got this kind of break, what I'm really trying to capture is somewhere in between that 100 and 76% line, because that kind of gives me just that bonus range. Seriously though, even this is why we have it, the ABM. When it's caught up between those two ranges, it becomes perfect, because you can play a pivot on either side of it. If you get a continuation below it, then you utilize it as stops. You will get stopped out of some of these on occasion, and that's okay. That's just what you expect from a 5K read. But if you get close enough towards the 100%, you can literally just stick slightly above that and just follow it to see if you get the continued breakdown. Because once you break below the zero, you would expect that you're going to break into a new zone. If you get a pivot prior to breaking before that zone, you know that you got problems as far as expecting it to break down further, and you can transition. So even from this like DOC spread that took place here, you've already got your steel reset, and it's already starting to turn up. Not uncommon. This can still break down significantly, and it starts to, but then it supports right at the 61% line, and then you turn around in the histogram, and you can see there's a little bit of an orange candle histogram in there. And with that, you begin to make your evaluations according to your stops and the turnarounds, obviously, of Red DOC, when I'm looking at higher pivots versus lower pivots, I'm much more interested in this setup right here because I've already made a previous higher peak of red. I've already starting to see a turnaround. I would have thought that one would have given a little bit more, but just showed how resilient it was, and from the 50K we still weren't seeing any weakness. But not surprisingly, the breakdown takes you to there and well below when it does get started. And that's going to be some of the slight flexibility that just happens within a very, very short time frame chart. It's not so much on the 50K, because in the 50K you get a much broader view. DOC spread started here. You had the complete reset. We were still in rising, but then there's a couple of bars right here as we start to meet Azure and Gold. And that becomes then a critical one to start looking at and say, okay, is my DOC spread continuing? Am I getting any support from orange dipping back below for new buys? In this particular case, no. In fact, it was going just the opposite. Once you had that meeting right here, you started to break out with cyan going higher, green going lower, and short-term buyers and steel starting to fade. Even though Chicken was just continuing its last little hurrah, sort of rolled over right at that time when that spread starts to grow. And we had moved to the zero and faded below it and started, in fact, now making a lower peak. So still holding up quite well. I mean, all we've done is went to the 61% and popped right back up from there. So it's just kind of a stop clearing mode. What happens with those kinds of situations? Typical, we had some positive extremes from before, and that's what I like to look for, because if I get a nice series of positive extremes, then I know where I've got target ranges to fill back into. If we've got a bunch of positive extremes that have already been filled along the up route, a lot less of a range target to really give yourself, and that could be a little bit more frustrating if trying to short into every little DOC move that takes place. And that's why we certainly don't attack them when they move above the plus 15 on the shakeout warning line, because the momentum of that is super strong, and that always gives us a clue. So in this particular case, even with this up rally, none of it was all that encouraging, I think, from a strength standpoint. So was not afraid to attack any of the signals that came through. They just didn't produce enough of anything. It's just one of those where you end up with break-even kind of setups, or a lot of times I'll look for just crossover dip. When I get that, if I get a dip, I go ahead and take a small profit on a portion and then look for any opportunities to capture some more. And that's part and parcel of playing with a 5K. It is helpful with the new Deocon paint, looking for broader trend runs, and it's pretty successful with that overall. So I'm not upset about that one shape. We can see that it also recognized that short signal much cleaner here by turning completely red, whereas these just went neutral because it just didn't have enough significance to them. As always, though, I will keep updating things. Indicators will be coming out very shortly, and you'll have them all set up for Wednesday's action. As always, trade well, though, and we will talk again later.